Courtney, it was an interesting speech. He used a lot of the stock phrases that he's been using. The Fed will act as appropriate, he said. He did use the phrase data dependent, which was in the title of the speech 7 times during the actual speech. And the question, I think, becomes, is the Federal Reserve Chairman telegraphing to us that there's more uncertainty or less uncertainty about whether the Fed will cut rates? The market took it as less, actually bidding up the probability of a rate cut to 79%. It was in the low 70s for October, and I hadn't checked. It was in the low 40s or upper 30s when it came to the possibility of it for December. I'll look at that. There it is. It's at 40% right now. And he mentioned a few things about this quantitative easing thing. He wants to increase the reserves in the system to get rid of the problems that led to in the repo market, but announced a very modest amount. They want to bring it back up. So he said, this is not quantitative easing. And as a joke, later on, he said, did I mention it was not quantitative easing? So to be clear, guys, that what he's doing here is in order to affect technicalities in the repo market, not to affect monetary policy.
But Steve, it's also certainly not quantitative tightening.
Oh, yeah. No, there's no doubt they've reversed that in a big way, Wilf. If your point is that they were headed to a smaller balance sheet. Look, I think every observer out there on the street, and I don't know the extent to which the Fed acknowledges it, Wilf, but they got it wrong. They misunderestimated the amount of reserves that were required in the banking system to keep the Fed funds rate where they wanted it to be. They need to put more liquidity into the system, and now they're trying to figure out how much. He did announce today, rather definitively, Wilf, that they will be putting that money in the system.
Steve, thanks so much for that. Josh, I guess it's a great snapshot of two competing forces on the market. You get a positive, more dovish tone out of the Fed, but you also offset it with something that worsens the trade atmosphere at the same time.
Potentially, but I do agree with you. Those seem to be the two poles, and we're oscillating back and forth between them on any given day or week. I think something interesting to point out, the Dow is now flat over the last 1, 2, 6, 12, and 18 months. Has gone absolutely nowhere. My friend Jonathan Krinsky at Baycrest points out, as of today, we are right smack in between the 50-day moving average and the 200-day. And what that means for the average investor and for professionals alike is that extreme opinions in one direction or the other are not being rewarded. And if you're acting on extreme opinions at the top of this range we've been in or the bottom, likely you're chopping yourself up and you're not doing yourself any favors. And that has been the story going back to January, February period of 2018, since the onset of the trade war and that rhetoric really being dialed up and then the subsequent tariffs. So that has not changed. I hope it changes. But what is interesting is, while that's happening, you've got very large, very liquid S&P 100, S&P 500 names, household names, making new 52-week highs and in some cases all-time highs. So I'm thinking about Nike and Apple, D.R. Horton, Chipotle, Hershey. These are companies where people are saying one of two things, Wilfred. They're either saying things are not as bad as people are starting to feel, and I want to be in these stocks, or things are getting bad, and these stocks will be a safe haven. These companies will navigate what's to come better than other companies. And I think choose your own adventure as far as which side of that you're on. There were some things looking really good, though, in the chips. I just want to really quickly spotlight chip equipment, AMAT, Lam Research, KLA-Tencor. These stocks are making new all-time highs. That's not an accident. There's something good happening in various parts of the market. It's just not the entire market.